My guest today is Michael Byars. Michael has purchased more than a dozen companies with more than 140 million in annual revenue. Thanks a lot for coming to the Holdco Builder show, Michael.
Thanks a lot for having me.
Michael, you're an expert when it comes to buying profitable businesses for little to no money down. So let's start with you sharing your background all the way from university.
All right, awesome. Yeah, I grew up in a small little town here in South Carolina, and about 12,000 people. We didn't have a whole lot growing up, but we made it. And I did pretty well in school. Got a full ride to Clemson University to go to college. I started a tech company while I was there, and I ended up dropping out of college about a year and a half in to really concentrate on that tech company. It was doing pretty well, and well enough to support me at the time, and I was able to grow it. I took some of the money I made with it. I bought a small restaurant. It was doing about $200,000 a year in annual sales, about $50,000 a year in profit. I took that restaurant and grew it to over $3 million in sales and $1 million a year in annual profit within the first 2 years. I carried on with that. I operated it for 9 years, and then I sold it. And when I sold it, I went and bought another larger failing restaurant. It was losing about $4,000 a week when I bought it. And within the first 13 months, I had it making over $1 million, and I ended up selling it. At that time, I took some of the money I've made in some of those acquisitions and started buying real estate. I was buying, single family homes, B- class type stuff that I could add a year's worth of rent to and, really build it up. And, now I've got about 185 single family homes that I rent out. But as I started buying those homes, I started seeing the need for ancillary businesses around them. So I started buying a property management company. I bought a plumbing company. I bought a heating and air company. I bought, a forestry mulching company. I bought a ton of stuff surrounding that industry so I could really support my customers or my renters better. I wanted to make sure that they got the same experience from me that I would want to get if they were renting me the house. And as I started doing that, I started seeing that, I'd started a few businesses through that time. They never went real well. It was just too much work to get them going, and they kind of got absorbed into some of the other stuff I was doing. But I really started to understand the power of buying businesses instead of starting them. I was paying a little bit for that stuff up front, but I didn't have to go create a logo. I didn't have to go create a website. I didn't have to go hire employees. I didn't have to go create systems, operations, any of that stuff. All of the SOPs and all that stuff were already done. And I was able to walk into a cash flowing asset and start making money day one. And once I realized that, it really changed a whole lot of things for me. It changed the way I was looking at businesses. Instead of, going and trying to start these things to solve a problem, I just went and bought them. I already knew that the systems and the processes work because other people were using them and generating revenue with them. So, like I said, it was really a game changer for me when I really got over that hurdle and understood just the strength in buying businesses. Now I've got 18 companies under management. I've sold 5 companies so far. And, like you said earlier, we do about $140 million a year in revenue. But it's all because I was able to start buying these businesses and compress that time and learn from other people's mistakes and not have to make the mistakes myself to learn from them.
Fascinating stuff. I want to go a few steps back. The restaurant businesses.
Right.
These are some serious returns, let's be honest. How did you do that? What are the maybe 2 or 3 things you changed in those businesses which ended up being game changers?
I implemented a lot of systems and processes. Before it was just it was the guy that was running it before. He was great, but he was getting older, and he didn't have the. It's not that he didn't have the knowledge; he didn't have the strength or the want to grow it anymore. It was just kind of coasting along, and he was happy with it coasting along, right? But as I came in, I was 21 years old, and I was full of fire and ready to get in there and do whatever it took to make it happen, and that's what I did. With some of his guidance, and some of his help, I was able to take and really grow in areas where he wished he had grown. He just didn't have the want to do it at that point. So a lot of systems, a lot of just figuring out exactly how to do what it is that needed to be done and do it the same way every time to streamline the process. That way, every person working there wasn't doing the same thing a different way.
Okay, before we getting into talking systems and processes, I want to talk a little bit about the mentorship because early in your career, when you got started acquiring businesses, you said you were getting a little bit of coaching, a little bit of mentorship, and you said it would have taken so much longer without learning those lessons from someone who's been doing that before. What did you learn from this guy? What did you learn from this mentor? And how was the overall experience of getting the feedback?
Man, honestly, I feel like I learned 80% of the stuff that I learned in business from him. He was just such a smart guy, and he was so willing to help anyone that would take his help. Right? He was willing to help me do anything I wanted to do as long as I would listen, and I would. There's been things that he's told me that I was able to figure out a different way to do it or a better way to do it. He was like, "Oh, well, that's cool. I never thought of it that way." I think we really worked good together, and he really enjoyed helping me because no matter what it was, I would take whatever it was that he told me and put it in action. I would really take action, and I was always coming back for, okay, that worked. How can we improve the next thing? It was always about improvement and constant growth. And I think, he enjoyed that. Like I said, he was to the point in his life where he didn't want to make it grow anymore. But I think he enjoyed watching me make it grow.
Can you give maybe one or two examples which were really like eye openers for you? Because for myself, I've been a lifelong salesperson, and really early in my career, one smart guy who was many years ahead of me just gave me one simple advice. Every time you are in a conversation and you're selling something, whether it's a product or a service, you finish your sentence, just do a pause for 3 seconds. And this is important, but what is even more important is when the person you are talking to, when they are finishing the sentence, just count to 3 in your mind, and you will be surprised how much information you'll get. And this small tip has helped me to sell so many products and services which otherwise would have been probably possible, number one. And it really helps in a fundraising process as well, because even those wealthy individuals, at the end of the day, it's human psychology, and they don't really like the silence. So I really use that quite often. But coming back to the question, what were maybe one or two things you learned? You can say that, okay, this was really a game changer for me.
Probably one or two of the few things that really stuck out to me that he really taught me was, to always over deliver a superior product, no matter what the case is. Always over deliver a superior product. And he always told me to, do what you say you're going to do, even if it costs you money in the long run. And I've gotten some business deals in the past where, I've lost money on maybe the first deal, but there's more deals to follow up because I've told them, here's a great example, Corona. Man, I made some estimates on some of the deals that I've done on some of the businesses that I had during Corona. During Corona, as everyone knows, right, the prices on materials just skyrocketed. And I carried that over, even though that's been over 20 years ago that he told me that. I carried that over, and I had to lose some money on a few jobs during Corona because I'd already given them the price. When I went back to buy the materials and stuff, the materials were so much higher, I ended up losing a little money on that deal. But I still have those people's business. They still trust me to do their jobs. They still trust me to do the stuff that I was doing with them, even though that, they knew that the prices were higher. They respected me for keeping my word and doing what I said I was going to do. The delivering the superior product and doing what you say you're going to do. Do what's right every time, no matter if someone's watching or not. If you can kind of hold to those ethics and those theories, I really believe that anybody, as long as they hold to those, those ethics and stuff, they're going to do all right in life and in the world, especially in business, because it's so rare nowadays to find someone that that actually does what they say they're going to do.
Systems and processes. Restaurant businesses taught you pretty much everything when it comes to building your businesses. You said you applied the same exact systems and processes you'd built over 8 years of experience building restaurant businesses. What systems and processes are we talking about?
For being in the restaurant business for 9 or 10 years, it really taught me a lot. What it taught me first off was you don't ever want to be in the restaurant business because those are horrible businesses. I made a lot of money, but man, it was a 16, 18 hour a day job, no time off for your family. It was it's good money, but it's super taxing for like your personal stuff, right? But I mean, it's just inventory, the way we did inventory, the way the products we sold, it was all about creating something different for the customer that no one else was doing, whether it be drinks or whether it be food combinations or whether it be, a cheap loss leader to get people in the door to buy the alcohol, to hang out, to create an atmosphere. It was all about doing something different than what was currently going on in the market. I've taken those theories and those things that I've learned through those restaurant businesses and applied it to all the other businesses that I've bought. A lot of that stuff is really the same, right? It's not that I cook a shrimp and potatoes on Friday here. It might be I offer some kind of weird combination of software or some kind of combination of something that no one else in the market is offering, but I know the market currently needs. So it's really about being able to build those combinations and doing things that other people aren't doing and thinking outside the box in order to create those things.
Can you maybe give a few examples, if you're willing to share? How do you implement those same systems and processes you learned in a restaurant business in, for example, in your portfolio companies of a plumbing business or HVAC business?
So really, it's all the same. You got to think outside the box, number one. But, you're only implementing sales, operations, and finance. Those three key pillars are the key to any business. And, every business has to have sales. With no sales, there's no money to pay the people to do the operations and no finances. You got to have operations because after someone sells it, you have to be able to fulfill that order, and you have to do it in a timely manner, and you have to do it exactly as you told the customer you were going to do it. But without operations, the salesman job is worthless, right? And so is the finance guy. You can have all the money. If you can't fulfill the orders, you're just wasting everyone's time. And you also have to have finances. If the sales guy sells the product, the operations guy can fulfill it, but you can't buy the stock to make the product, you're still wasting your time. So that's why I say it's so important to cover all three of those aspects all the time and have rock stars in those places in any business that you're going to do. You ask about how did I implement, operations from the restaurant industry over into, say, the plumbing industry. Really it's all about building out the correct sales teams. The restaurant is not as much sales teams as that it's good waiters and waitresses, good bartenders, good cooks, good front of the house people. You want someone up front to be pleasant and welcoming when the customer shows up. Same way with, like a plumbing company. You want somebody pleasant to answer the phone every time that the phone rings. You want to make sure that they get their job done. You want to make sure you do the follow-up. Hey, Bob, how was your service? I know we came out and changed your sink out. Just checking to see if there's anything we could have done different to make your experience a better experience. Yeah, it's a plumbing business. It's dirty work, and normally it's transactional, but I want my customer to know that I appreciate him. I appreciate the business, and I want him to call me next time he has the same problem, right? So I think that's super important. Follow-up is super important. Any of those things that the customer experience, if you can create, you got to think about a lot of stuff. Like, I don't know about over there where you're at, but over here we have like Dave and Buster's, which is like Family Fun Center, where it's a bunch of video games. You take your kids, they go play video games, and they're super expensive, right? But they're not selling video games, just like they're selling the customer experience, right? They have a restaurant in there. You can take and feed your kids, and you can carry them over there and let them play $30 or $40 worth of video games and entertain them for an hour. It's not that you can carry them somewhere else and and let them play the same video games for much cheaper, the experience is better. Everything is under one roof, and that's what I'm catering to. I'm catering to I want my customers to have that same feeling in any business I have that they deal with me. I want them to say, hey, after the job is done, I want them to come back and say, hey, to their selves, I really like this guy and I want to do business with him again. I really like the service that he provided me and my family. So I really think that's important, and that's something that you can really transfer over to any business, right? As long as you overperform and the customer is always happy, I think you'll be just fine.
When we take the sales and marketing, and you have, like you said, 18 companies in your portfolio, did you acquire an agency, or did you build everything up from scratch? Because you mentioned before it's easier to buy a company, right? So how do you manage it all? You have 18 companies. Do you have each of one of them has a separate salespeople, separate marketing teams, or how is it structured?
So the marketing team is mostly in-house. Each different company will have their own sales teams. I really strive to hire the best folks in whatever field it is that I'm in, for sales and for operations. All of the finance stuff is handled in-house for all the companies. All the marketing stuff is handled in-house for all the companies, but the actual day-to-day stuff that has to go on is handled. Each company has its own separate kind of ecosystem or atmosphere.
Okay. Now the operations. I believe this is a big one as well.
Sure.
What exactly needs to be changed to improve a business? And maybe you can give us an example what was going on before you acquired the business and what type of changes you made after, let's say, post-acquisition.
Each deal is different, so it's tough to kind of broad strokes it. But I mean, I'll give you an example. I bought another tech company that I rolled up into mine. And some of the things that I changed to make the customer experience better was they didn't have 24-hour tech support. I offered that. After I bought them, those customers, they all of a sudden got 24-hour tech support. They can actually pick up the phone and talk to someone. They were making them put in like support tickets through like Zendesk or something like that, which was a horrible customer experience. The customer didn't get to talk to anyone. They had to put in a support ticket and deal with stuff over email. And as you know, in the tech industry, especially dealing with the end user customer, man, those guys just want to pick up the phone and talk to someone and get their problem solved. Just give a better customer experience. That's what I'm looking for. Anytime I buy a company, I'm looking, how can I improve that customer experience? How can I streamline stuff? How can I build software? How can I, build SOPs, standard operating procedures to make that customer experience better? Because at the end of the day, if you make that customer experience better, they're going to tell their friends, hey, I was with this company. They were doing it this way. This new company bought it, and the experience is so much better. You got to go give these guys a try if you're in the market for whatever service it is I'm offering. That's really what I'm looking to do through any company I buy. I'm looking to improve that customer experience, whether it be streamlining it with software, just anything I can do to make their experience better. Because at the end of the day, without customers, you really don't have a business, right? And with technology the way it is today, there's so many people that can just hop up and bounce up out here and start a business, do anything that they want to do. That doesn't mean they're going to do it well, and that doesn't mean that they're going to pick up your customer base, but it does mean that competition's out there, and I feel like you have to provide the best customer experience and the best product you can to the customer in order to retain those customers and grow in your business.
Now, finance part. What about this? It's my strength are pretty much the soft things you mentioned: customer service, sales, marketing. But the finance, for me personally, it's my weakness. So, what about you? What are the changes you make oftentimes when acquiring the business?
So like I told you, all that stuff comes in-house, and I've got an in-house CPA and some in-house accountants. Really, man, it's about building the team. If you get a good team of accountants, CPAs, lawyers to help you do due diligence if you need, that's what it's all about. Those guys are your backbone, and they always will be your backbone. You've got to learn you got to learn finance stuff on your own, how to read P&Ls, how to read balance sheets, how to read tax returns if you're going to buy something. But and it's really about getting experienced people that love what they're doing. It's kind of like anything else. Kind of like, if you go do something and you have to go do it and you hate it, you're never going to do as good of a job at it as if you really love it, right? You've got to find those people that are passionate about the things that you don't like doing. And you've got to give them all the reins. You got to give them freedom to take and do what they love doing. You can't micromanage them. You can't do any of that type stuff. You've got to let them perform in their natural environment. Does that make sense?
Yeah, it makes sense. Now, you mentioned due diligence. I found something very interesting, which you said. You once spent 8 to 9 months and almost spent like 120,000 on due diligence and still decided to cancel the deal.
Correct.
What happened?
It was a great deal. It was in the healthcare space, and as everyone here knows, man, it's a touchy space, with the laws and the regulations. And it was a great business. It was doing about 18 million a year. But man, at the end of the day, I went and hired all the best lawyers I could find. I went and hired old prosecutors that were prosecuting healthcare cases for the government. I went and hired those guys to tell me what it's like thinking from the other side and help me reverse engineer all of the pitfalls and the risk if something did happen. What's going to happen? How am I going to get myself in trouble if I buy this company? What do I have to change in order to make everything work if I buy this company? And at the end of the day, I could have probably bought it and made those changes, but at the end of the day, it was just the risk wasn't worth the reward for me. I didn't want to take any chances of getting in any trouble. I've got a son, and I just, man, he is why I go do all the stuff I do and why I buy the stuff that I buy and why I continue to grow like I grow. I want him to have something, and I want to be able to leave him something. If I get in trouble, I get locked up or get put in jail, there's no way to grow from there, right? You can only grow out, so I mean, I just felt, in my personal opinion, the juice just wasn't worth the squeeze. The risk wasn't worth the reward for me to go in there and possibly get in trouble doing something or get in trouble for something someone else had done in the past. So for me, even though I spent a lot of money and a ton of time running around trying to hire the best of the best to help me and build a game plan, it just wasn't worth it for me.
You mentioned the little one. That's really awesome. Having a 1-year-old at home as well. It's a big motivation to do all sorts of things, but at the end of the day, spend as much time with her as possible. Talking a little bit about acquisition targets. What size of the businesses you're acquiring? Because you said previously you look for businesses with 1 to 5 million in revenue with 20 to 30% profit margins. But now you mentioned this, the ones we were just talking, the due diligence one, it was an 18 million year business. Which businesses are your favorite, and where do you see you can provide the most value?
So I like the stuff $1 to $5 million is normally where I'm telling my students to go look. That's where I like to buy too. There's just, it's so easy to take and kind of bring them up and really beef them up. It's super easy just adding in sales, operation, and finance, because as you know, businesses are kind of built in stages or, groups, I guess you would call, that if the owner is doing $0 to $300,000 a year, it's a one-man show. It's your landscaping guy, and it's him and maybe a buddy that's running around yard to yard, pushing the yards. He has to do everything. You get that $300,000 to $1 million. Now he's got a few employees. He's got maybe 2 trucks. He's still working in the business because he has to. But, he's delegating, figuring out a few different things of delegation, hiring some real good kind of quarterback people to kind of run the crew leaders, and he's able to expand. But he still doesn't have it all figured out. That 1 million to 3 million, they've got a few crews. They've got normally 10 or more employees. They've got some systems and processes figured out. They know exactly what to do to pull the lever, but normally those guys are, I would say, 50 years old plus. And what they really aren't good with technology and marketing. That's where I can bring in and build out software, implement software, bring in marketing, bring in finance to be able to really understand what's going on with the business. And man, just shoot it from, I look to buy stuff $1 to $5 million, grow it to $10 million plus in 36 months and then resell it. I can really see what needs to be done and what I can do to really, really, really add value to these businesses in that $1 to $5 million range. So that's really why I like that. I'm looking for something $1 to $5 million, 25% plus profit margin with 10 employees, and I want it to have been in business 10 years or more. I want to make sure that it's steady, not some fly by night something, and if it's been in business 10 years or more, I know that they have a good reputation built up. If not, they wouldn't have made it that long, right?
What about the acquisition multiples you see currently on the market or for the past 5 years? What would you say has been the average EBITDA multiples you've been able to acquire a business?
In that $1 to $5 million range, normally you're acquiring them for 3x or less. And it depends, if the company is doing $500,000 a year, you're going to acquire it for 1x or less. So it really depends on, how much they're really doing and how much their net is and how much debt service it will support if you got to carry debt on it. You can't buy a company doing $1 million a year with 15% profit margin. At the end of the day, your debt service on that's going to be $150,000 a year. You can't buy something like that and have all of the debt service eat up your net profit. There's no reason going to work for free. I mean, you could go to McDonald's and make the same amount of money, right? So it's really important to really know your numbers and really know exactly what it is that you're really diving into and trying to buy. Because if your profit eats up your debt service or your note payment, I mean, nobody wants to sign on to $1 million note for $20,000 a year, right?
Do you buy 100% of the business?
It just depends on the deal, I'll buy all or parts of a business. It just depends on, what the deal is, what I can bring to the table, what they can bring to the table. If I like them, if I trust them, if I could see myself doing business with them in 5 or 10 years. I've done a lot of deals that I've just bought part of the company. I've done a lot of deals that it was either one or the other. I buy all the company or none of the company, just really because of the owner. At the end of the day, if you're going to buy a part of it, you're betting on that owner, right? You're betting on them, their personality. Really, you really got to think about it, because this is one of the things I really do a lot when I go to look at a business. I really want to see what that person is like too, because at the end of the day, if the person shows up 30 minutes late, half drunk, not knowing what's going on, I promise you, if that person is a train wreck in their personal life, that business is also a train wreck. So you really got to get around the person, see what they're like, see how things really operate.
Maybe you could talk a little bit more about the key man risk and what have you seen works best, and for how long they will stay around in case you make an acquisition where the operator keeps building the business post acquisition.
So if I'm going to do something like that, I'm looking for someone to stay on 6 months at least, all the way through whenever. I've got businesses I've bought part of. I still do business with them. The partner still stays on, the old owner. Maybe it's something like the guy that I originally started doing business with the restaurant. Maybe he wants to still be involved somehow, but he just doesn't have the passion and the drive to make it grow. And I can come in and really scale the business up, make it grow, and it works out for everyone. I want to make sure if the old owner is going to stay on, they're going to hold some portion of the note. I want them to be invested also. I want them to have to make it work in order for them to get paid. I want to make sure that they're not selling me a bag of goods. And it also builds confidence for me that if they're willing to hold the note and they're willing to stay on, that means they got to see me every day for the next X amount of time. That means that, they're not going to just sell you a bag of trash and come look at you every day. Normally for me, it's a real good indication over, is the business really what they say it is? Or are they trying to pull the wool over my eyes and trying to pad the numbers or me not see something that's going on? I know that if they're willing to stay on and they're willing to finance all or part of it, that, they're not going to lie to me because they know that they can't get paid if they do.
What about the challenges and maybe mistakes? Because this is often where we can learn the most. What have been the biggest mistakes you've made when acquiring a business? And has there been any acquisition where you failed or you messed up like a big time?
Yeah. So I actually bought a concrete company. Probably it's been a few years back. I didn't do real good due diligence on there. It was an off-market deal that came to me, and it had to be closed quick. They had some issues. I didn't do enough due diligence, and it was the same thing, just like I just told you. The old owner was a train wreck. I didn't really see that, or didn't see a lot of it until it was too late. Like I said, I didn't do enough due diligence. I did 2 weeks, 3 weeks worth of diligence, and then ended up buying the company, which was a major mistake, man. I mean, your average deal is going to take you 4 to 6 months to close. It's not like a house. It's not like any kind of short-term stuff. If you're not spending 3 to 4 of those months doing due diligence, really digging in, figuring out exactly what's went on in the past, getting a firm growth trajectory and a growth plan, man, you're just not doing yourself. You're not doing what you're supposed to be doing, and you're going to get in a jam, just like I did. I end up catching him stealing, and end up just shutting that business down just because it wasn't worth it to me for the mental headspace. I was worried more about what he was doing and not doing than what I was supposed to be doing. At the end of the day, I just scrapped it and moved on. But I learned a lot from that. I learned that I got to do that due diligence. And I also learned that, just like I told you, if the old owner is a train wreck, so is the business.
You mentioned buying a business, then building it up and then selling it within 24 to 46 months. Obviously, it depends. But when acquiring a business, do you already have a list of buyers or people ready who you've said that this is what we are going to do? And you can be ready because within, as I said, 24 to 36 months, we might have something which is interesting for you. Or how does it work?
Yeah, so a lot of times I do. Sometimes I don't. Like I said, I only buy stuff I know I can add value to. Sometimes I'll have people come to me and say, "Hey, I'm looking for, I'm looking for a plumbing business, $1 million to $3 million that's netting anywhere between $300,000 and $900,000 a year." I can go out and find one of those, and even if it's a little smaller, I can grow it to meet that portfolio size. I can grow it to whatever they want, or I can go out and buy it, build it up, get everything streamlined, and then resell it to them for a higher price. Then other times I find stuff that I know is a good deal that has a good cash flow currently, but maybe it's one of those things that, I see a potential to double or triple the cash flow. And at that point, I'm just buying the business for the cash flow because I know I can grow it super easy. To kind of answer your question, I buy for two different reasons. Either I'm going to buy for cash flow, or I'm going to buy because I already have a buyer and I know what they want.
Can you share a deal, something you're extremely proud of, and when sharing it with others, you're like, damn, I did a really, really great job. And can you share a deal?
Yeah, I mean the tech support company I have. I mean it was a good deal. I didn't per se buy it. I started the tech support company, like I told you, when I was in college, but I've bought other tech support companies to be able to build it to the size that it is. What I really learned when I went from, I did probably $120,000, $130,000 a year for 4 or 5 years. I couldn't get out of my own way. What I really learned is, there at one time, I took me a sheet of paper and I drew me a line down the middle of it. I wrote what I liked on the left, what I didn't like on the right. And I started hiring people to do the tasks that I didn't like. And I went from about $120,000 that year to a little over $4.5 million the next year, just by delegating those tasks and getting out of my own way. Find the who to do the what, right? Finding people that enjoyed the things that I hated. And they always did a better job than I did. Stuff got done a ton faster. And it was just a lot better environment because I know me, and if I don't like doing something, I want to procrastinate and drag it out. Then I want to do part of it and go do something else and then come back and do the rest of it because I hate it so much. I didn't have those problems. I only did the stuff that I liked. And man, my business really took off.
What about the no money down acquisitions? Maybe you can share what are some common misconceptions or myths surrounded the idea of buying a business with little or no money or no money. I mean, it really sounds too good to be true, and maybe you can share a few risks.
At the end of the day, I don't teach no money down stuff. I teach no money out of pocket. So for any of the guys in the real estate space, they're already borrowing money from other investors. If you want to buy a business and you need, so the SBA here in the USA will finance 90% of the deal. If you need that 10% down, a lot of these guys just go to their other investor friends or people they've been doing deals with before in the past, family member, a friend that might have some money. Or I mean, there's tons of way you can do it. You could get in there, and if the company's super heavy on assets, you could buy it and then go get like an asset-based loan. You might have to borrow some money up front for the short term from friends or family or other investors, and then go refinance that back through the bank. There's just a ton of different creative finance strategies that I teach. But I mean, there's going to be work involved in any of it. Nobody's ever going to just roll over dead and give you anything. You've got to get in there, you've got to work, and you got to make it, especially with the creative finance stuff. I really think that it's important to make it a good deal for everyone, not just, it can't be a zero-sum game. It can't be where in order for you to win, the seller has to lose. It's got to be in order for you to win, the seller has to win also. I kind of think about it this way. If the seller wants a higher price, I might ask for owner financing or partial owner financing. It's kind of like their price, my terms, or my price, their terms. If they want all the money up front, no problem. I'm just not going to be willing to pay as much for the business.
What types of businesses or industries are particularly well suited for this type of no money down acquisitions?
I mean, anything really. Anything where the current owner doesn't have a succession plan for their business. I like buying things where, like I've told you, I only want to do stuff that I know I can scale. So I want to buy stuff where I see I can add value. And, at the end of the day, you got to be able to show the current seller where you can add that value and how you're going to grow and give him a growth plan, because nobody wants to sell their business that they worked so hard for over the years to somebody they think's just going to tank it or run it in the ground or fire the lady that's been working at the front desk for the last 30 years. Nobody wants to do that. If you can create a succession plan for these people and give them a good growth strategy plan and a good 3-5 year plan and explain to them in depth how you're going to do it, you've got a ton better chance at getting owner financing or creative financing than just rolling in there saying, hey, I just want to buy the business. I'm going to fire everybody and start over. No small business owner who has built a $1 to $5 million business wants to see that. They care about their employees. They care about their name on the back of the Little League jersey at the end of the year. They care about things like that.
Michael, I need a bit of your advice. We want to acquire a niche manufacturing business. It has a EBITDA around 300, 400,000 euros. There are different ones in the pipeline. Many of our investors who we've talked to have said that we should target those 1 to 3 million EBITDA type businesses instead, because they have a management in place. But what we see with those smaller opportunities, as you just said, they're in between range 1 to 5 million. I see how we can add value there. We have an operator who wants to keep working with us. We would buy a majority of the business. They would like to work for us within the next 2 or 3 years. What would you tell to those investors to convince them to maybe invest into what we do instead of waiting for us, waiting that once we get into the game of acquiring those larger businesses? Do we need to convince them, or we just should talk with more investors?
Myself as an investor, I don't want to be convinced of something. And I don't think you should try to convince your investors of anything. If they're not the right investors and they're looking for bigger projects, by all means, go look for other investors. Or maybe you come up with a game plan, a creative strategy for these guys. Say, hey, I know you guys want me to buy, and they're wanting you to buy that because it's going to be set up better, and it's going to be easier to sell down the road, right? So, but maybe you come up with a creative strategy or a creative play for these guys and say, hey, I know you want to buy something with at least $1 million plus EBITDA. Why don't we take and go buy 3 of these with $300,000 worth of EBITDA? And here's the growth plan to get them to that $3 to $4 million worth of EBITDA over the next 24 to 36 months. They're looking for something stable, right? And the smaller it is, the less stable it is. The bigger the deal is, the more stable it is. So from their standpoint, I understand why they're telling you that. They're looking for stability. But, if you could roll up 3 or 4 of these businesses and make one out of it and really cover the market in a lot of places that you're at, maybe you buy 3 of them that are within 150 or 200 miles of each other. Does that make sense? Roll them all up into one big company and let them service that whole area. If I was you, I wouldn't be looking to convince them to buy the smaller stuff unless you were looking to. Investors just don't like to be convinced of anything, right? They think you're trying to sell them something. They're not trying to buy anything. They're trying to do a deal just like you're trying to do a deal. Their position in that deal is just different than yours. And just like back where I was telling you about, it's got to be good for everybody. It's got to be good for them too. So if you can show them a way where it meets their buying criteria, and it also allows you to buy those smaller businesses, that's what I would do. But I wouldn't try to convince them of anything, because if you've got to convince them of it, they're not the right guys anyway. Or you just go find some other ones that are $1 to $3 million. After you buy them, after you buy one of those, you buy some of the smaller ones surrounding it in the same kind of niche market to grow that company. So at that point, you'll be growing through acquisitions.
Can we talk a little bit more about what you're doing when it comes to coaching and consulting? And you run an event called One Relationship Away. By the way, it like immediately gathered my attention because I think one connection, one person can really change your life, can change your business. Can you talk a little bit about what you do with your consulting business?
Yeah, so I have a consulting business called Acquisition CEO. I've trained others. I've trained over 400 people in the last 2 years, exactly in the steps and the processes of exactly what I do. Buying businesses $1 to $5 million, how to bring in sales, operations, finance, how to find those people, how to fund the deal, how to sell the deal if you want to flip it, how to grow it once you've acquired it. There's a ton of stuff that I go through. Who that you're going to buy it from? Why are they willing to sell to you at this point? So there's a ton of stuff that, the event's 2 days long. I've got a 1-day event, 1-day virtual event coming up here in about 2 weeks that we're going to go through and do, just to try to help other entrepreneurs out. Really, man, I really like doing the consulting space, just to give back to other entrepreneurs, to help the guys that are currently where I once was. Because, like I told you about that mentor that I had, if I hadn't have found him, I 100% believe that if I hadn't found a mentor and I hadn't have found that one guy, that I would not be where I'm at today. I really have to encourage all other entrepreneurs, whether it be me or someone like me, go find someone that can help you grow to where you want to get to. Just like buying a business, you're paying for these people's time and stuff they've put in and failures that they've made to get to the point they're at. I really think it's important to go find a good coach or a good mentor so you can pay them for their mistakes, so they can tell you about their mistakes and help you where you don't have to make the same mistakes, because mistakes are costly. Every one of them are costly.
That's really awesome. What's the future for Michael Byars?
But I really like the consulting stuff. I'm going to continue to buy businesses. I mean, I bought a few here in this past year. I'm going to continue to buy. I'm going to try to buy 4, 5, 6 a year from really from now on, because I'm only buying stuff that's stable. I'm buying cash flow, really. I buy stuff that I enjoy doing. I buy stuff that I can add value to. So really, it's not like work, right? It's like a hobby that makes money, right? I kind of feel like I'm pretty good at it. So I enjoy doing it. I enjoy giving other people opportunities. We'll see where it goes from there. I really want to grow the consulting company. I like doing consulting. I like doing coaching. I really like helping other entrepreneurs is why I even started doing any of that.
Entrepreneurship is what changes the world for better. How
For
has
sure.
entrepreneurship and buying businesses in particular changed your life and changed your family life?
It's gave me the opportunity to do stuff with more cash flow, more income comes more freedom. As I grow the businesses, as I find other businesses to buy, I just get more freedom to go do the stuff that I enjoy doing, or to go take my son to go do. That's what we're all after, all entrepreneurs. We're after buying our time back. That's what buying a business that's cash flowing already, that's what it gives you. You don't have to go through that torturous startup process with a startup business. It's not, 16, 18-hour days. It's, hey, I'm buying a machine that's already in motion. And, things that are in motion tend to stay in motion. So that's why I like buying cash flow instead of trying to build it.
Do you think it's easier to take a company from 3 to 8 than it is from 0 to 1?
Absolutely. 100 times easier. The bigger
Yep.
the deal it is, the easier the deal it is. That $17 million deal, $18 million deal I was telling you about, it was going to be easier to do than a $500,000 deal. I mean, I've done some $10 and $12 million deals that were much easier than $500,000 to $1 million deals. It's much easier. Paperwork's the same. The people are the same. Everything's just way more streamlined and put together.
Perfect. Let's wrap up with famous 5. How old are you, Michael?
I am 42 years old.
Favorite book?
Man, I like a lot of books. I read a lot. I like a ton of different stuff. I mean, there's some books on Steve Jobs I really like. I think he was a real pioneer and game changer in the entrepreneurial world and in the tech world. So just anything really about him.
Married, single, kids?
I've got one son and divorced.
What car do you drive?
So I have a Tesla Model X.
What's the best investment advice you've ever got?
Probably do your due diligence. Spend all your time on the due diligence. And, once you get the product or you have the product, make sure you over deliver and you do what you say you're going to do. Because without that, it's never going to grow.
What you're doing is very awesome and helps a lot of people. Where can people find you?
You can go to my website, or I have a Facebook account, but my website is acquisitionceo.com, and you can look me up on Facebook under Michael Byars or Acquisition CEO, and my last name is spelled Byars.
Thanks a lot, and again, I really enjoyed talking with you.
Yeah, I appreciate the opportunity to come on. I hope you got some cool nuggets, learned a little bit today, and if I can ever help you in the future, please feel free to reach out.